Jesse, what just happened? It was happening and suddenly now it's not.
This deal already looked increasingly shaky, but it seems like Binance throwing a little extra salt in the wound on the way out of this deal.
It's kind of a stunning development that at the top of the hour, Binance walked away, because just yesterday morning we had a tentative deal on the table between two crypto giants.
Bitcoin falling sharply on news of the FTX Binance deal. Jared Blickery here to break down the charts for us. Jared, what are we seeing?
Yeah, we're seeing a lot of leakage here. Bitcoin having the worst day. In fact, most of crypto is since at least June.
Cryptocurrency investors have lost billions of dollars in recent days due to panic selling in the markets. It was triggered right after the world's largest cryptocurrency firm, Binance, backed out of plans to buy its rival FTX. Why is Binance walking away from acquiring FTX within hours of announcing the deal? What's happening in the crypto market? Stay tuned, as in this video, Charles Hoskinson discusses and explains what's going on right now. And if you haven't subscribed already, be sure to hit that subscribe button for more videos on the latest crypto market updates and trends.
FTX is a major financial player, and they do a little bit of everything, a little bit of the money transmission stuff, a little bit of the market making stuff, a little bit of the trading stuff, and they were led by Sam Brinkman-Fried. And SBF, as we all call him in the industry, was recently going on a tycoon surge. Throughout this year, he made or attempted to make many high-profile acquisitions, like the Voyager acquisition, for example. Now, Sam, on paper, apparently was worth quite a bit of money. He was a deca-billionaire, so technically had assets over $10 billion. And the books of his organizations cumulatively were over that much as well. It looks like what's occurred is that FTX was, through a series of transitive relationships, closer to what occurred with Luna. So Binance has made an offer. They've signed a non-binding letter of intent based upon due diligence. And as due diligence is done, oftentimes things are discovered, and uncomfortable things, especially the relationship, financially speaking, of the founders to the entities, as well as how funds were used and how much risk exists within the entities. There is a non-zero probability that the acquisition proposal that Binance has put on the table to bail out FTX, to acquire it, will not succeed because it will fail due diligence.
Binance shared a series of tweets in which they revealed that they were pulling the plug following news reports alleging FTX's mishandling of customer funds and the U.S. investigations. The company said that it was looking to support FTX's customers, but the issues were beyond its control and the exchange's ability to help investors. Well, I must say it was not all unexpected. I mean, this is often the case in many distressed assets, that when people look at them, they discover that they are far more distressed than they thought. And that was the case with FTX as well. Because of its size and scale, it is very unlikely they will cascade through the cryptocurrency market. Let's get into the next clip to see the thoughts of Charles Hoskinson on the matter on the effect on cryptocurrency in terms of market stability and predictability. But before getting ahead, be sure to like and share.
We have a situation where cascading failure could occur in the markets. And it's unclear how likely that scenario is. It just is based upon the level of transitivity of connections, leverage, debt, and other factors with FTX, and if FTX gets a bailout or not. Now, this might be isolated to certain asset classes, and it may be isolated to certain financial institutions that trade and deal with crypto. But it certainly in the short term could have a significant impact on cryptocurrencies in terms of market stability and predictability. So a lot of volatility could come. Now, we will know a lot more this week and next week as due diligence is done. And if Binance chooses to go to the next level and go from a non-binding to a binding acquisition offer, as well as some more forensic accounting is done on how bad the situation really is at FTX and the level of insolvency they have and how their assets have been moving around and what the accounting tells us. This will likely not be public knowledge for some time, but will probably get exposed either through a bankruptcy process, a class action lawsuit, or an acquisition process, or a regulatory event, or all of those above. I still do believe cryptocurrencies are here to stay. I think these are very inconvenient and kind of shitty events and circumstances, and we just have to work our way through them together. I remember not too long ago that I made a video when Luna collapsed and mentioned to the community that we could get through it and things are going to be okay. The day of it, it's always tough. And I imagine there's a lot of people that are heavily invested in those ecosystems, FTX and others that are connected to it, that are hurting a lot today.
Charles Hoskinson believes we can all witness cascading failure in the markets. The decision of Binance backing out came as a shock to many as the markets reacted sharply, with Bitcoin dropping to $16,700, while Ethereum was hovering near $1,100. The asset's recent price movement has many investors concerned about a potential end for crypto, or if a long bear market is taking over. What does this mean when people try and separate out what happens with the tokens versus what happens with some of these exchanges that are actually holding the keys to people's tokens? As Charles Hoskinson mentioned, it all has surely created more volatility in the market.
So overall, pretty shitty day for crypto, and unfortunately not an unexpected one. The good news is there's not many of these players left, and there's not much of this rampant speculation left in this respect. The after effects, the hangover of 2021 is starting to fade a bit. And I think this might be the bottom, one of the last ones to deal with. It's going to be hard to predict how bad it will be, and it could certainly potentially be very bad. But there's not many more firms that were like FTX or Alameda or like Three Arrows Capital and so forth, at least in this cycle. I truly do hope that this is the last cycle of this nature. I've been through, I think, 7 of them now, and they keep getting more complicated and difficult. And this was really the first one that involved a heavy amount of institutional structuring. Cryptocurrencies have a small window of time to prove themselves. And I get real sad when these types of things happen because we could have done better. We should have done better as an industry. And every time one of these things occur, it's a black eye for us all, because consumers, regulators, and everyday people, they don't differentiate the FTXs from the Ethereums, from the Cardanos. They just put everything into one bucket, crypto. And for better or worse, we have to live with the victories and the failures of the industry as a whole.
Were there red flags along the way that we might have seen or that we may have missed? What's your biggest question about the next shoe to drop here? Can Bitcoin really drop below 15K? What's your outlook for the crypto market scenario after this FTX fallout? Let me know your thoughts in the comments below. And don't forget to like, share, and subscribe for more latest videos on the crypto market. Thanks for watching, and adios.